That's 19 before 9 if you insist upon analog, and it's time to check in on your money and find out what's going on Wall Street. Let me see here. Could it possibly be trade wars? That's always a safe bet. Let's confirm said guess with Phillip Statler, our resident expert from Statler Financial Services in downtown Sebring. Phillip, good morning. How are you?
Hey, good morning, Dave. Doing well. Just running a little behind because of some technical difficulties, but we're going to make it through it this morning.
I think we probably are, and heaven knows the markets aren't going to be predictably off this morning because China and the United States are still throwing rocks at each other, and normally a jobs report like this would be enough to give us a big boost. First-time jobless claims, 211,000. That's pretty darn close to a half-century low. So far, the economy's at least employment situation isn't looking half bad, is it?
Well, it's not. Now, that wasn't a whole lot different than what was expected. I mean, they expected 215,000. So it was kind of, I mean, basically that would be in line with what expectations were. So you wouldn't expect that to move the markets a whole lot, but it is interesting that, you know, we're getting so low. I mean, that you and I both have talked before, there's not much way to go but up when we start looking at some of these numbers now.
Exactly, and that was kind of the off the cuff remark that I had. I assumed it was a pleasant surprise because how on earth could you possibly expect it to be any lower than that? That's even below the normal sifting and winnowing between jobs that takes place at full employment.
Yeah, it really is, and so you know, at some point, we know it's going to get reversed. I mean, we know that at some point the business cycle is the business cycle, and it's not going to stop somewhere in the middle. So at some point, our economy is going to head into a contraction mode, and when it does, we'll see these numbers start to rise again.
That's absolutely true. So being on a low ebb is probably a good place to start that inevitable business cycle. So a little fudge factor up to healthy wouldn't be bad. Looking at interest rates, one thing that does attract my attention, the 10-year Treasury bills. We always look at the interest rates on federal bonds as to what the yields are like as being an indication as to how confident people are in terms of equities. Hitting an 18-month low, I'm showing that 10-year Treasury bills are at 2.36% this morning. Boy, all that work the Federal Reserve is doing trying to raise interest rates, it's just having such an effect, isn't it?
Well, yeah, it's but again, it's the move to safety. This really doesn't have much to do about the Fed because people are just a little fearful of what's happening in the market. And so we're starting to continue to see rather, people taking money out of the stock market. They're going to be happy with earning 2.3, 2.4% in U.S. Treasuries, knowing that their principal is going to be backed up by the U.S. government.
Yeah, guaranteed nothing beats the risk of a big loss any day of the week, doesn't it?
Oh, absolutely. I mean, when you think about it, you're so right there.
Now, it attracted my attention, though, it's full 8 basis points down just overnight from yesterday, which really indicates that we're jittery about junk like the trade war. China and the United States barely speaking right now. China has a tendency to talk through their party-controlled media, and they're talking about the United States taking aggressive warlike actions. I mean, oh, Lordy, the rhetoric is getting hotter instead of cooler, isn't it?
Well, yeah, it is. It's and I don't know that we're going to see it get any better anytime soon, because one of the other headlines I saw was China says trade talks can't continue unless U.S. addresses its wrong actions.
Yep. Another one of the press reports out of China was calling them warlike actions, and this is starting to sound like Donald Trump talking to the Democrats instead of the United States and the Chinese, right?
You're right. It is starting to sound that way, and hopefully that we'll get something worked out here sooner than later, and start to see some improvement in our numbers.
Understood. Fingers is crossed on this. And we do have some news coming out of the companies that we actually trade, including a couple of household names at the tail end of earnings season. Among others, one that's just up the road from us with electronic widgets at Best Buys, right?
That's right. Yes, Best Buy came in. They beat expectations by about 16 cents a share, which is pretty good. Revenue beat as well. Their same-store sales were up 1.1%, which was about 0.2% better than expected. So Best Buy really had a good quarter, and so it's trading up this morning about 2.8% before the market opens up today.
We'll take that happily. Any other good indications? I'm glad to hear good news to start the morning out on at least one stock.
Well, another retail stock we have is L Brands. Now, people may not recognize that, but that's the parent company of Victoria's Secret and Bath and Body Works. And so they had a big surprise, a really big surprise, because they were expected to break even. No loss, no gain for the quarter. And they actually came in with 14 cents a share on earnings. So that was truly a big surprise this morning, or actually yesterday after the market closed. And so they're trading up a little over 8% this morning.
Did they say which one it was that drove that big increase, the underwear or the bath salts?
No, they didn't, Dave. They just gave the raw numbers.
I was kind of curious, but it is a good sign, though, when a quote-unquote luxury specialty store like that, whether you're talking Victoria's Secret or Bath and Body Works, when they do well, that's an indication of disposable income in the nation. And once again, we've got these conflicting signs. We've got to slow down economically. We're still growing, just not as fast as we were. And then you see a 100% discretionary company like L Brands kicking butt. They're right at the top of my big winners list this morning.
Well, yeah, you're right, and that's true. And it's important to also know that specialty brand is not a cheap specialty brand either. And so I think that also adds some credence. And like I said, I didn't get any details within the report other than some big high numbers out there. It'd be interesting to see what drove that, and will it continue? I think that's probably the more important question, Dave, is will it continue into this next quarter?
Absolutely. And any husband that's ever gone lingerie shopping at Victoria's Secret for Valentine's Day knows this is not a cheap place to shop by any measure, is it?
No, it's not. Hey, we've got a couple other, two other earnings reports have come in. One people should recognize this name, that's Hormel, the food maker. They beat by a penny a share. Forecasted the revenue was a little short, though. They did also cut their full year guidance, which is usually not a good sign. I guess there's been some African swine fever, which is affecting their beef and pork markets over there and their imports. And so they're trading down this morning 4.4%. And then the last one I have is a medical device company, Medtronics, which is a pretty popular name when it comes to medical devices. They came in 8 cents ahead of estimates. Revenue also beat the street, and they issued their guidance was largely going to be in the range of the consensus that, and so they're trading up about 3% this morning.
All right. It's nice to see him. At least some of the issues having good news. Setting the table this morning, the Federal Reserve minutes came out yesterday afternoon. They basically said what all the rubber chicken speakers have been saying, that the Fed can't be counted on to try to trigger a rally in the stock market. They're going to hold pat where they are on interest rates with no bias for or against an interest rate cut or raise. That means the Dow was down yesterday by about 100 points, NASDAQ off by about 35, and the Standard & Poor's off by about 8. Those equated to between a quarter and a third of a percent loss yesterday. Normally, we kind of had this up and down. Down yesterday means up today. But, Phillip, it doesn't look like we're going up this morning. How are we doing 45 minutes early?
No, we're definitely following through from yesterday with some red ink across the board. And it's not gotten any better this morning. It's kind of seesawed a little bit but in the red. But the Dow's down 250 points right now, which is almost 1%. We've got the S&P 500 down a little over $23, which is about 0.8%. NASDAQ's down 82, which is about 1.1%. We do finally have gold and silver coming up just a tad. Gold's up 0.6%, silver's up 0.8%. Still, not close to those tops of the $1,300 an ounce and $15 an ounce. So, and then crude oil is retreated some. It's down 2.25% right now to $60.04 a barrel, and it just ticked up. So it was down below 60 just a little while ago.
What's causing the drop in the price anyway? Was it inventories?
I don't know. I mean, I know the inventory was supposed to come out yesterday. I didn't really see the number, and I haven't seen any headlines to indicate what that number looked like.
Yeah, with all the issues in the supplying countries, I'm just kind of surprised by the decrease in price. Don't get me wrong, I'm not complaining. I'm just confused.
Yeah, let's don't complain about it. Let's just appreciate what we're getting right now.
I'll take that happily. World markets overseas, everybody is off. Mainland Chinese markets off by more than 1% at the close this morning. Europe pretty much following suit because they're also worried about Brexit negotiations as well, which are going absolutely nowhere. So European markets are off this morning as well. Phillip, need advice. Help me stabilize my retirement. I want to make sure I can retire. How do I find you on the phone?
Well, you know, Dave, with all the volatility we've seen the last few weeks, it's very important that folks get a financial x-ray to determine how much risk they have in their portfolio and make sure it lines up with their risk tolerance number. And to schedule your appointment, call us at 382-0037. Follow us online at statlerfinancial.com, and then join us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings, where we address a lot of these issues coming to retirement. And that's on News Talk 730 a.m.
Twice a weekend and streamed online at newstalk730am.com. Phillip, one more day left of the week. Let's see if we can turn it around for Friday. Fair enough?
Sounds good, man. Take care. We'll talk to you in the morning.
Thank you, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, again, I want to thank you for joining us today. A little technical issue, having to work from the house this morning, but heading into the office now. Thanks for joining us. I look forward to speaking to you again tomorrow. Have a great day.